Alright guys, here's what happened today. The resistance was breached, and after that immediately price moved to the upside almost to $9,000, but didn't hold there, and we saw this massive red candle down to almost to $8,300. So basically all the short orders were liquidated and were stopped out, and the majority of the long orders as well. And basically this is in a good agreement with what we talked about yesterday, that price may go actually higher but not dramatically higher, and then return back and even dumped harder. So this is exactly what happened, and in principle situation didn't change much. So we are still in a kind of a sideways price action. We still have a higher low and a higher high, meaning that the risk of the drop even lower is not that huge. But at the same time, everything will really depend on the fact of how many long and short positions are there open still, and price will probably go where the liquidity is. Right now we probably will continue moving sideways for a while, and speaking about that, I shall return once again to this chart which we were looking at before, a kind of a comparison between the current consolidation and the consolidation when we had a drop from $6,000 to $3,000. So you see there's a lot of resemblance, and even this point which we had today is very similar to what we saw there. There was this mini pump and then dump after that, lower than the previous level, and then like a sideways price action for a while, and then after that we had the surge of the price from $4,000. But of course we will not necessarily see the same thing. However, this resemblance, those small features which are looking exactly the same, all of that is very, very interesting. Here is what I also wanted to point out. I don't think that I told you that, but if we look at the stochastic oscillator on a weekly time frame, then we will see that right now it is at the very, very low point, like almost 7, and we didn't have such a low value of the stochastic oscillator starting from the end of 2011, basically when we just saw the first point of stochastic, because of the history was very short. So technically right now we are so low that we are in a very nice position for the long entry, because we actually even lower than we were when the drop from $6,000 to $3,000 was, and although we had a lower low here, but we have a higher low here in the price. So it doesn't mean, of course, that we will surge like from this point tomorrow or in a half an hour from now, but again, long term, it is a nice point to buy in my personal opinion. And speaking about the points which are a bit in a shorter time frame, this is the chart with the MACD on a daily time frame. You see the bullish crossovers every time when we had them during this bull run, well, like the bull market starting from February, we always had the rise in the price after those crossovers. And moreover, it is confluent with the fact that the price is going above the Bollinger Band's baseline, or it crosses it actually from the bottom to the top, and even happened the same on this correction. So right now we have this bullish crossover, the price is very, very close to the Bollinger Band's baseline, and technically, again, according to statistics, we should see the rise in the price after that, like within maybe a few days, maybe a couple of weeks. So I just want to stress out that from the technical analysis point of view, everything looks pretty much positive. It doesn't mean that indeed we will see the massive run in price like within the next week or something, but it means that we have a very nice chance for that. So let's not be disturbed by the moves in the price we just saw today, and look at the more global picture, and in my opinion it is pretty bullish. Okay guys, that is it for today. I hope that it was useful. Thank you for watching.